is in shortages: gas, oil, copper, aluminum, coal, you name it. And the same thing is happening with precious metals. You're just not seeing the price action yet because the demand for physical metal is so far greater than the price would lead you to believe in that.
Okay, and following up on that, this is a question that you can definitely give us a detailed answer on. How easy is it right now if you want to get your hands on gold and silver? What are you seeing at Miles Franklin? Are there products that are in low availability? Are you having supply chain issues? What are the premiums like?
You know, it's funny. I often feel like the little boy who cries wolf. I remember, at the end of the story, the wolf comes, and I think people should realize that, because for the last year, I have since March or April of 2020, I have been vehemently saying that this industry will be defined by the inability to readily source product, and it's getting really hard. In the 30 years I've done this, I have never had a more challenging, difficult time getting product. We're one of only 24 U.S. Mint authorized resellers in the world. We have storage programs in Canada, so we're very intimately close with the Royal Canadian Mint. We're very close with the importers for the UK Mint, for the South African Mint, the Austrian and the Australian Mint. Getting product is ridiculously hard, mostly in silver. Gold is not hard yet. When I looked at the volume of business we did last year, over $500 million, 90+% of it was in, probably 95% of it was in silver. Getting silver is becoming super hard. Gold isn't yet, because most people have been buying silver. So gold, actually the premiums on gold have come down over the last year or so, because it's something called the cost of carry. And that means if you hold a whole bunch of gold in inventory and you're not selling it, there's a cost for holding that, the interest cost, the cost of money. And so the premiums have come down on gold, but gone way up on silver. And I think at some point when gold catches this bid, a big bid, the same thing will happen there. But I've seen it many times over my 31 or 2-year career where all of a sudden, like that, stuff disappears. Now, I know Rick Rule, he's a buddy of mine, and he's told me many times and says it publicly all the time that right now, if you take the entire financial matrix from Joe Sixpack to the Harvard Endowment Fund and everything in between, gold and silver holdings represent less than 0.5% of all of the holdings in the United States. And so, the average or the mean over the past 40 years has been 2.5%. 8% in 1980, 0.5% now. The average is 2.5%. If we just got that far, that's a 5-fold increase in demand, and like that, it's all gone. And I do think that even though that we're high up on the food chain, I have 2 full-time employees that do nothing other than acquire metal. One works during the day here in the States. One works at night talking to all the mints and the importers across the globe, in Europe and South Africa and Australia, the United Kingdom. And it's a full-time job. It used to be something where I wouldn't even think twice. I'd call a distributor, and in 3 days, whatever I wanted would be in my warehouse. Half the time, they would say, here, we'll just throw it in your warehouse. You just leave it in there, and if you need it, it's there. If not, we may have you send it back to us. I mean, that's the way it used to be, not any longer. And I think you're seeing a greater interest globally, coupled with supply chain issues. You got our buddy Jeffrey Christian from Jeff Curry from Goldman Sachs on Bloomberg TV the other day, saying that in his 30 years, he's never seen markets like this where everything is in shortages: gas, oil, copper, aluminum, coal, you name it. And the same thing is happening with precious metals. You're just not seeing the price action yet because the demand for physical metal is so far greater than the price would lead you to believe, and that's because of COMEX. And at some point, that has to break. Charlotte, I really do believe that the only way you can manipulate a market, really manipulate it over an extended period of time, especially one that is globalized as this is to push it in the direction it is going. And you have a whole generation of younger people who, even though they bought cryptocurrencies to get wealthy, most of them, not buying it to protect the way a lot of the metals people do, they understand the relationship or the dichotomy between fiat currencies and cryptocurrencies. They understand it. And so you have a whole generation of people who are waking up to the problems associated with fiat currency. And I think before it's all said and done, even the diehard crypto bucks will find refuge with a lot of the profit they make, hopefully, in gold and silver. And I think before it's all said and done, this market will be defined by the outside. People will look at it and say, geez, it's gotten so expensive, I can't buy it. Kind of the way a lot of people feel about Bitcoin right now. But by people like you and I and the people you talk to every day, it'll be more along the lines of, yeah, it's expensive, but you can't find it. You can't find anything. There's huge delivery delays, massive premiums. And that is what is coming, especially if we see some sort of an event where people all of a sudden snap awake and look around and say, my God, everything is crumbling. I need to find some safety. Like that, it's gone. So there is some availability now. Look, we're still in business. There are a lot of companies in business, but it is not the way that it was. And premiums are as high as I've seen them in 30 years. So at least in silver. Is it going to continue? If I had to guess, I'd say yes. In fact, I think it'll get a lot worse.
Okay, and when we talk about all this demand, I think some people might think, wow, okay, why don't the miners simply produce more? But of course, we know how hard it is to make a discovery, to bring a mine online. And miners are dealing with inflation now as well. So I wonder if you could comment a little bit on all of those factors on the mining supply side.
Yeah, in fact, you have Dan Dixon from Endeavor Silver. They just withheld 1 million ounces of silver from the market. Keith Neumeyer has done that before, but take 1 million out of 850 million, that represents like 0.1%. So, first of all, people say, well, why don't the miners withhold instead of mining more? We'll talk about that in a second, because like when we talk about silver being epithermal, when we talk about the big deposits being found a long time ago, when we talk about that only 30% of the silver comes from primary miners, well, we could say it about gold, but let's just talk about withholding supply. Instead of feeding the beast and allowing them to manipulate it on COMEX, how about not give them any new material to fill their vaults with, the COMEX vaults, and see what happens? Well, it's a cost-intensive industry, and it's getting more expensive with the rise in energy costs. But when you talk about looking for silver in particular, you have to dig further, explore more, you have to expend more energy, because the low-lying fruit was picked a long time ago. So Dan withheld 1 million ounces. Sounds like a lot. It's almost $30 million, but that represents not even a tenth, just over 0.1% in global mine supply. So it's spitting in the ocean. And I don't know if producing more, of course, produce more. I don't know that that's the answer. I think the answer would be to try and disintermediate the commercial banks altogether, to go directly from the mines to the public. I think would have a much better, and from the mines to the end user, like these Samsungs and the Tesla and the Apple, and stop using the financing of the commercial banks, stop allowing the commercial banks to manipulate COMEX. And I'd much rather see just a complete disintermediation, and I think would have a greater effect. Producing more, sure, I'm sure they'd like to produce more, but there's a finite amount out there, and it costs so much, and so it affects the bottom line. They're damned if they do, they're damned if they don't. I just think that it's one of these deals where gold and silver have been ignored for so long, and in favor of financial assets. It's given the cartel the ability to really do as they wish with the price. And I'll tell you this, and this is honest to God, the price is not reflective of the demand. And ultimately, I think a global wave of demand, as markets start to shake, will hopefully overwhelm the ability of these commercial banks, especially with the new Basel III reserve ratio requirements. That makes naked shorting very difficult, and not able to be counted on their balance sheets against equity positions. I think it'll make it much more difficult for them to do that. I think they'll have to think twice in an environment where inflation globally is running rampant, where markets are shaky, where people are nervous, where geopolitical tensions are at all-time highs. I think it's a very foolhardy endeavor ultimately. And when you look at a bank like Bank of America, who's so massively shorted, it could ultimately put them out of business the way it did Bear Stearns when silver went from $12 to $21 and JP Morgan inherited their position. And, you know, Chris Marcus did an interview with Bart Chilton before he died, of Arcadia Economics, Chris Marcus. And it was groundbreaking. Here you had the former CFTC commissioner a week before he dies basically say all of this, that JP Morgan had been manipulating the price, that they were supposed to pare down their short position, but they in fact increased it. They thumbed their nose at the regulators, that they were suppressing the price, and it was complete and total antitrust fraud. And so the bottom line is that this stuff is happening, and I think these banks are skating a very, very fine edge, because in all the years I've done this, I've never seen more interest and more realization that, you know, perhaps divesting of dollars and dollar-based instruments is something that should be looked at. One of the things that's very startling to me was the number of people that we did business with in the last year or two that have never, ever, ever owned gold before, never, ever owned silver before. There's an awakening, and it's gradual, but there are a lot of people who realize that it's easier to make money these days than it is to keep it. And when the markets start to really shake, I think that will certainly come into focus a little bit more, making it that much harder to get product.
Yeah, and I think that maybe one of the reasons we're starting to see that is because people can feel inflation in their everyday lives, right? It's not one of these large numbers that you see somewhere and it feels very abstract. It's in your day to day.
Yeah, I think it's actually taken on a more relevant. I think people are more concerned about it than they are the virus right now. I think it's probably surpassed that. People are beginning to really be concerned about it. Yeah, so that's step one, you know, awakening, realization, and I guess we'll see where we go from there.